Hello everyone, welcome to the Elliott Wave Forecast.com chart of the day. My name is Henry Lau and today is Friday, January the 18th, 2019 and the time is around 2:45 a.m. GMT. So for today, we will take a look at the pound yen here. This is a 45 minutes chart of the pound yen. We can see the right side is higher with the green stem. Okay, so what that means is that we like the upside as far as this 137.33 stays intact. All right, so we are expecting the pair to pull back, and the pullback should be unfolding in 3711 swing. And as far as that pullback stays above 137.3, the pair can extend higher again. Now you can see we labeled this the move higher to this. Let me see what the level is. The move higher to 140.4, we label it as W, and then the decline here to 137.3, we label it as with X. So it's a double tree structure or double correction, WXY. If you look at the 4 hour, okay, so you can see this is the WNX that we see earlier here in the 45 minutes chart. Okay, so we can see clearly that this move from the low to this high to the W, this looks like in a 3 swing, 1 2 3. So this looks like a zigzag. You can see this is an ABC. So if I put it here in the 4 hour, then this is going to be in the ABC. So you have a 3 swing, a 3 waves move from this low as an ABC, ending a W of a larger degree. Then the pullback ended the with X. Now after that you got a new high above the W, so suggesting that the pair has a high sequence from the low, and it can continue to go higher now as far as pullback stays above the with X, which is basically what we are showing you in the 45 minutes chart here. Okay, so now how far it can go, if it goes to the full 100%, it can go to as high as 146. Okay, the near-term target though is this area here, which is 142 and 144 is going to be sort of the near-term target on the upside. So going back to the 45 minutes chart, this rally over here can be unfolding in a couple of different structures. This is one of the possible structures, which is a zigzag ABC. And if this is a zigzag ABC, then we have reached the area in which this zigzag could be ending. The C leg is equal to the A leg, and then we could be ending this cycle and then starts to correct that cycle, right? But another possible structure of the rally, for example, is going to be a 1-2. This could be a 1-2 impulse. All right, 1, 2, and then now we are ending only with 3, if that's the case, right? And this with 3 can even extend to 1.618 because with 3 typically is the strongest wave. So we can, for example, do something like this, and then after that doing a wave 4, and then another leg higher in the wave 5, and then once we end the wave 5, we will be ending with A of the higher degree. Okay, before we got a wave B pullback to correct the entire rally from this low. So as you can see, the rally here can be unfolding in a couple of different possibilities, and the one that we choose to show it for today is this zigzag structure, but that doesn't mean it cannot be an impulse. It can be an impulse, right? So the takeaway is that as far as the pair stays above 137.3, the pair can continue to go higher. Okay, and near-term target is going to be 142, 144. It can go there immediately an end with a here, for example, like the alternate that I'm presenting, okay, before we get a B followed by a C, right? That is certainly also a possibility over there. Okay, so that's what we are looking for. Now, one other element that is important is the fact that this really needs to hold this pivot in order for this view of the bullish view, at least in the shorter cycle, in order for the bullish view to stay, okay, to stay valid. Now, a couple of things with the overall correlation of the market. Now you can see the S&P right now, which is normally correlated with the yen pairs pretty well. You can see S&P is now retesting this channel. This is a daily chart that has been broken. This is a 1-year channel, by the way. It has been broken, and now in the process of retesting that channel. And also S&P already reached this 1, 2, and then 3, and already reached the 100% equal leg. So which means that what this is saying is that we could potentially start to pull back at any moment in the US indices at least. And again, if the correlation stays true in a risk-off environment, when you see the indices pulling back, you will see the yen pairs generally speaking is not going to perform well. So that's why looking at the indices here, you need to be a bit cautious in the yen pairs as well. I mean, for now we can still stay with this. As far as staying above this, we can continue to extend higher, but how much more high, how much more it can rally and so on, we need to be also paying attention to the indices, not just the yen pairs, and seeing the overall correlation. Now in the company, we always look at the overall market. We believe in one market, and we believe that everything is related. We cannot be looking at one instrument in isolation. We have to look at the entire market. All right, and the indices again is giving us a little bit of warning sign that okay, maybe we should be a bit careful, okay, with the bullish bias in the yen pairs, even though it still can extend higher based on the structure right now. Okay, so if you enjoy this video, okay, and you want to know the next update, the next path, you can always try us. We got a 14 days free trial, and see you all again tomorrow. Have a nice day, everyone.